What's up guys, James here with Fun Fact of the Day. Hope you guys are having a great day, learning lots and getting stuff done. Today, we are here to talk about the craziest savings accounts that you've never heard of, and those are called negative interest rate savings accounts. That's right, imagine a world where you put money into the bank and they took some of it from you every single day, and you did this willingly. Well, this is actually the world that a lot of people live in Europe right now. And so, we are going to talk about it. Why in the world does it exist in the first place? And then, of course, the bigger question, why does anybody actually put their money in these things? Because actually, more and more people have been putting their money in these negative interest savings accounts. So, let's get into it. In order to fully understand why this is happening at all, we need to go back to 2008, when the economy collapsed. Well, we, as Americans, we recovered pretty well after a while, but Europe, they're still having a tough time. So usually what happens when an economy stops doing well is the government jumps in by using what are called central banks. And those central banks are in place in order to help stimulate the economy when bad things happen. So one thing that they have done in order to do that is to start charging commercial banks money in order to store their excess reserves there. Normally what happens is commercial banks, they keep a certain amount of money with the central bank just in case everybody wants to withdraw their money. And then any excess profit that they have, they keep at that central bank, and usually they collect some sort of interest on it. But one way that the central banks have learned to incentivize these banks to take out that money and start giving it to you and me in the form of loans is to do so through negative interest rates on their excess reserves, which means that it actually costs them money to leave their money there. So, of course, they then withdraw their money, but what do they do with it? They can't actually give that money out as loans because currently in most of those countries, loans actually all come with a negative interest rate. If you want to learn more about that, I will link a video all about it down below. So they have to resort to other means. Now, obviously, they could just store all their money in cash in their bank vault, right? That's usually what banks are known for. But in actuality, most banks have insurance policies that forbid massive amounts of money to be stored in their vaults because it makes them a target for violent attacks, things like armed robbery, because if they have millions and millions of dollars on hand, they become quite the target, and they don't want that. So they can't do that, so what they do is they just leave it in the central bank, and they pay the fees, and then they pass down those negative interest rate fees to you and me, the customers. So now the question is, why in the world would anybody actually take their money in these banks, put it inside, and then lose it? Well, first we have to look at the three types of people who store money in these banks. The first of which are people with retirement accounts, or pension plans, as they usually call them in Europe. Normally these pension plans are heavily tied up in bonds. They don't usually just put them in a bank account. However, right now, in about a third of the world, bonds are actually negative yielding, which means that you lose money over time when you buy a bond. So, in order to quote-unquote save money, they've resorted to putting them in these negative yielding bank accounts because it's slightly less expensive to do so. The next type of person who's willing to actually put their money in these negative interest savings accounts are giant companies. Usually they want their money in a specific country because the currency there is valuable. For example, in Switzerland, people put a lot of their money there. Even though they know they're going to lose some of it in interest, it's still worth it to them because they expect that the currency value will increase and they're hoping that the interest rates will turn around soon. The next question is, why would regular people like you and I put our money in these bank accounts that actually lose money? Why wouldn't they just keep it under their mattress or in a pile in their living room? Well, exactly for that reason. You don't want a giant pile of money in your living room because if somebody breaks into your house and steals it all, you're screwed. And because in a lot of these European areas, the crime rates have been going up dramatically lately, so it's not a very safe climate to just be keeping hundreds of thousands of dollars in cash on your floor. Also, people are pretty lazy, so the chances of them actually going down to the bank and pulling out money just because the interest rate dropped from 0.1% to negative 0.1%, It's fairly low. And that is basically why negative interest rates exist in the first place and why people actually keep their money in these weird savings accounts that lose them money. If you want to learn more about negative interest rate loans, like I touched on briefly during this video, click the link down below. I have a much more in-depth video just about those, and stay tuned tomorrow for another video about negative interest yielding bonds. Find out why people are actually buying bonds that lose them money. Or do they? If you enjoyed this video and you want to see similar ones, click on the link right here. I will have an entire playlist of every video I've ever made just for you. And like and subscribe. It really helps the channel grow, and it'll just make me happy. Thank you very much, and I will see you tomorrow.